Debt syndication. A loan offered by a group of lenders who work together to provide credit to a large borrowers. Private equity. An alternative investment class and consists of capital that is not listed on a public exchange. Valuation services. Valuations of business, tangible assets, intellectual property, intangible assets, stock and securities, ESOP and private debt instruments. Financial advisory services. Primarily focused on providing advisory services in the areas of corporate finance, capital structuring, transaction advisory and M&A. Credit rating advisory. Our team's experience can bring in immense value by getting the desired rating upgrades or saving them from downgrades by fine-tuning the strategy. TEV study and DPR report. Evaluating the technological feasibility and economic viability of project to finding out the degree of risk involved. Insolvency services. Assess the financial position of the firm, partnership, LLPs and individuals, in several instances and try to save their business. Training. We are a pool of senior banker, academicians and professors specialized in all kinds of soft skill training. We are specialized in solving your all types of financial needs.
Resurgent India Knowledge Series present virtual session on exploring the latest fintech innovations in the Indian NBFC sector. Know your speakers.
Mr. K. Gupta, Director, Resurgent India Limited, handling all kind of financials worries of the clients, core competence in the field of corporate finance and management consultancy and believes in providing complete and hassle-free solutions to the clients at Resurgent India. It is a knowledge-oriented, full-service investment bank and financial consultancy firm that provides service in area of debt, equity and transaction advisory. The main object of the company is to work for the realization of the vision of India's future. Mr. Shibabrata Mandal, co-founder and CEO, Wizergos. Shibabrata Mandal started his career 25 years back as a software developer in Wipro after graduating from IIT Kharagpur. For most of these 25 years, Shibabrata spent in various techno-managerial roles building complex hardware and software products in the areas of data networking and storage. Shibabrata worked for many years at Cisco and later as an early employee of a startup, Virident, which was later acquired by Western Digital. Mr. Balaji TK, CTO, IndiTrade Scalerator Limited. Balaji TK, who has demonstrated growth through technology and has expertise in bringing the right solution for hyper-growth in domain like finance, BFSI, retail, manufacturing. He has acquired skills in artificial intelligence, machine language, cloud, application modernization, business process, ERP, infra transformation, digital transformation, mobile-first approach. Completed Masters in Computer Applications from Bharatidasan University in late 90s, post which, been in the multiple domain helping business to scale through technology. Mr. Ramanathan V, Director, Srinidhi Capital. Mr. Ramanathan has vast experience of around 25 years in commercial vehicles finance in companies like Sundaram Finance, Tata Motor Finance, Citicorp Finance Co Limited, subsidiary of Citibank, Sakti Finance, and Shri Ram Transport Finance Company. His relationship with manufacturers and dealers of commercial vehicles will be asset to the company. Mr. Manish Arora, CEO, Karat Solutions LLP. Manish comes with almost 26 years of diverse experience in the marketing and financing in the space of manufacturing and financial services sector respectively. He has built successful SME businesses/franchises from the ground up across multiple institutions through wearing multiple hats: marketing/distribution, business head, product head, project lead for digital lending. He has worked in several leading banks and NBFC likes of Citibank, DBS, Yes Bank and Fullerton. Mr. Narendra Mair Padi, former CMD, Indian Overseas Bank, advisor, in Kube Collaborations. Mr. Narendra Mair Padi is an eminent banking professional having more than 40 years of wide experience and exposure. He started his career as officer trainee with Corporation Bank. Later, he was appointed as chairman and managing director of Indian Overseas Bank in 2010 and retired as CMD in 2014. During his long-stint career with banking sector, he has ensured to achieve all critical parameters like team building, brand enhancement, priority sector initiatives, branch expansions, new initiatives for effective risk management etc. in banking arena. Mr. Raman Agarwal, Director, Finance Industry Development Council. Raman Agarwal is the Director of Finance Industry Development Council, FIDC, a representative body of assets and loan financing non-banking finance companies. He is currently consultant to the World Bank, consultant to Nomura Research Institute Consulting and AMP Solutions India P Limited and area head, NBFCs at Council for International Economic Understanding, CIEU. He is advisor, consultant to some of the leading NBFCs and is also an independent director on the board of Pasialo Digital Limited, which is a leading NBFC in North India engaged in financing MSMEs on a digital platform.
Gupta sir, you can start the webinar.
Hello, good evening, friends. I am K.K. Gupta here, your host. I am representing Resurgent India, who is a merchant banker and investment bankers. So we are happy that more than 750 registration is with us, and the participants shown their interest on the subject how Fintech is reshaping the NBFC in India. The subject is most important regarding exploring the latest Fintech innovations in the Indian NBFC sectors. Fintech play a very important role as we're talking about the innovations. We're talking about the artificial intelligence. We are talking about the ML, machine learning. We are also talking about the rewards. Different subjects combined together. For a discussion point of view, we have selected the 4 topics on the subject. New pyramid for the Fintech and NBFC, which will be talked about Mr. Mondal. The use of robotic process automizations in streamlining operational workflow, which is will talk by Manish Arora. The impact of distributed ledger technology on loan disbursement and collection processes. So we are talking about our friends, Mr. Balaji, and need for NBFC to leverage wider data set for big processing unit. Another speaker, our ex-chairman of the Indian Overseas Bank, Mr. Narendra, and Mr. Agarwal will talk about. We are 5 eminent speakers on the fields. When we are talking about the Fintech. As per Department of Promotions, Industry and Trade, it recognized more than 2,000 fintech companies, startup in India, and with a market size of $15 billion in 2021. Now it is estimated that it will cross $150 billion by 2025. When we are talking about the NBFC, in October 22, 9,500 NBFC registered with the Reserve Bank of India with the total assets value of 42.05 lakh crore rupees. The NBFCs play crucial roles in the Indian financial system while catering to the diverse credit needs of the various sectors of the economy. Their ability to provide customized segment of the sector make them vital components of financial system. Making use of new age technology to overcome challenges and build product and services such as last miles reach and delivery alternatives, credit models, fraud detections, regulatory compliances, enterprises, automations, and accounting for treasury and reconciliation for traditional sector. So NBFC play a very vital role in the Indian economy. Whether we are talking about the 5 trillion economy by 2025, any sector, because India has 60% live in a villages. More than 95% of our micro SME sectors are placed in the rural sectors. Although the banks are providing facilities to these macro sectors, still NBFC will play a very important role for the financing of these sectors. When we are talking about the co-lending aspect, it has come in a big way to finance the macroeconomy. Now we are talking about the major aspect is the fintech. Will continue to be drives force for futures by 23-24. We expect greater use of blockchain and artificial intelligence, lot size, what you're talking about the shares in financial transactions, automation and integration will grow more sophisticated. As a result, customer will have access to more tailored services that better what their individual need. That means it will be getting to need of the common customers. In 2023, what we are talking about, we anticipate that the number of low-code or no-code solutions, white label SaaS and macro SaaS product will rise. Remote process automations will also see out of the days. I won't take much time because all the 5 our eminent speakers who are expert in their different fields profile we have already shown you. So first of all, I am coming to Mr. Mondal, who is co-founder and CEO, Bizargo. So, sir, this is a major aspect what we are talking about. What are some of the new paradigms emerging for the Fintech and NBFC? How they impact the financial industry as a whole? Because the Fintech playing very important role. Either you talk of anything, mobile banking, you talk about the core banking, you talk about anything are there for NBFC, whether you're talking about the ledger balancing, other things. So Fintech will play a very important role for that. So how your thoughts are there, sir, on the subject? Fintech vis-a-vis the NBFCs. I hand over to Mr. Model, sir.
Right. So, firstly, thank you, Mr. Gupta, and also thank you, Resurgent India, for inviting me into this panel discussion. In the beginning, I want to also mention that most of my background is really in the technology space. So I will limit my comments, mainly on the tech side of what I am seeing, what are my views on, what are the key emerging trends or technologies in this space. So before we start, of course, one thing that is clear to everybody is that technology is used mainly for one of two reasons. Actually, in the fintech space, it is really just one of two reasons. One is that either to bring some efficiency, to have maybe better margins, better rates, so efficiency of your operations, right? So that is one of the key reasons, business drivers for using technology. The other, very key reason of use of technology in the fintech space is really to address a market that was thought of as unaddressable. Right? So the way the banks operated, and after that, maybe the way the NBFCs operated, certain segments was thought of as unaddressable because of their operating model. And the fintechs, with their new age technologies, are trying to solve for that. Okay, so those are the two kind of major drivers, that unaddressable address unaddressable market or bring in efficiencies in your operations. Right? And if you take a step back and see what are the key technology drivers, like what has happened in the recent past that kind of accelerated all of these, right? So I would kind of list four things. So one of them is like internet, access to internet and mobile penetration, right? So mobile phone, smartphone, how many people have it in India today? And that kind of is a key driver. Another key driver, of course, especially in India, is what we call digital public goods, right? So the success of Aadhaar, also NSDL, UPI, these are another set of key drivers that are kind of an infrastructure layer that enables a lot of things. And that is another key driver. The third one is, commoditization of compute and storage. And not only that, it is now more affordable, you also have the option either to buy or rent. So that gives a lot of, small companies a leg up, right? You don't really have to drown like $1 million to buy all the equipment before you can do anything. You can now rent. So that is another key reason for a lot of innovations in this space. And fourth, I would like to point out is commoditization of algorithms. So when we talk of AI ML, really now it is, you don't need to have an PhD to start working on AI ML, because the algorithms are now commodity and everybody has access to them. So what is really the key differentiator there? The key differentiator is data. And that we will see how that really will drive a lot of the different partnerships and different business models, right? Because the algorithms, everybody has access to them. So because of these four, now the fintechs have built a lot of new business models and business cases, right? And if you see what are those, so I will kind of break them down into again four different categories, right? That where key new technology that has brought in new advancement. So one of them is actually pretty mundane, but which is API, right? Application Programming Interface, which one way of looking at it is that it is really how two applications talk to each other. But if you up-level a little bit, you can think of it as, either two departments of the same company talking to each other. That is the language in which they would talk to each other now. Or when you have partnerships with multiple different partners, then API is really what is the language that will talk to each other. And unless you have this really well-architected, well-thought-out API layer, a lot of the things will not be possible. That is really the first step. And this is still happening. If you look at the different NBFCs or banks in India, the API is not really a done deal yet. We are still working on it, right? So but this is really a key underlying infrastructure that has to be built up for a lot of the new automation, a lot of the new partnerships, new type of partnerships to kind of come about. Right? And I see a lot of work happening here. And while this API layer gets built up, then the other thing that really would happen along with that is data governance. Right? While through API you would expose the data, but then you need a really strong data governance layer to make sure that all the policies, you can kind of write down policies and they will be adhered. Right? So that layer would be another area where I see a lot of work that is still to be done. While these two looks very mundane and not as kind of cool as AI/ML, but in this space, I think there is a lot of thing to happen. Of course, the next thing is really this massive data processing, data science, which is like structured data analysis and decision making, and unstructured data processing, which I would, let's say, call AI/ML. So this is another space, another technology which is obviously getting a lot of traction, and every NBFC, every bank, every fintech has to pay attention to it, right? And that is happening, as we say. And here, there are so many different use cases of AI/ML. So even on a customer onboarding, you can see how, in some sense, it can take us, like to the, back to the future kind of scenario. Because many of us would probably remember, like in not very recent past, but maybe 20, 30 years back, if you had to open a bank account, the bank would like to understand you as a social person. So bank would ask you to give like 4 different people who would attest for your character and you are the good person in the society before you can even open a bank account. So when the banks needed to scale up, clearly that was not feasible anymore. And so it became more policy driven, more rule driven. However, with AI/ML, now, when bank is giving you loan, they are not only going to look at what is your pay slip. They will look at like, which restaurants do you go to? Do you like dining out? Do you like traveling? What kind of places do you travel to? Do you like driving? Do you, what kind of cars do you drive? Do you rent a car or do you already have a car? All of these data, that internet footprint that we are leaving behind, there are already, people who are working on building decision based on these kind of your social being, which is being analyzed to create a customized product for you, create customized solution for you. Right? So that is where a lot of this AI/ML on customer onboarding. And of course, that data is probably not available with the NBFCs or banks. Right? So there are some partnerships have to be struck. Then the other set of, so that is the second key technology area, right? The third technology area are in this like image processing, drones, sensors or IoT. So if you look at an adjacent sector to NBFCs, in the insurance sector, it is already being used to a really and very successfully, right? So if you want to work in the agri sector, then could you use satellite image to kind of understand, or even validate the land and the soil quality and climate, and so the underwriter now has much better quality information to make the decision. And the fourth, of course, is blockchain, which is really, I think, tailor-made for this sector. And since we will already again discuss about blockchain later, I would not go into more depth into blockchain, but that is another key technology that is going to happen. It is right around the corner. Now, the other part that I wanted to kind of talk about is, when you have a financial sector where there are these three set of players, the banks, the NBFCs, and the fintechs, there is bound to be, some shakeup that will happen. And some of the ways of working will keep changing, right? So how do we think about it? So you are already seeing some of the NBFCs trying to become banks, right? You are already seeing some of the fintechs applying for and getting NBFC license, right? So there is some kind of shakeup that would happen in the relationships between these parties. And so the NBFCs now really have to think of how do they use the technology. It is clear, I think, nobody is questioning that NBFCs have to really use technology, right? So they use technology by partnership. So clearly, one clear place is marketplace, right? So if a fintech is building a marketplace, the NBFC can get plugged into that. It becomes one of the channels. So there, they would think of that as a partner. And the other two options that NBFCs should definitely think of is renting technology or building their own technology, right? So there are many cases where it could be a SaaS company who is providing a service which is very useful to the NBFC, but the NBFC does not either have the quality of data that they're using or the quality of product that they have. They don't think they want to build or can build. Then that is a good option, right? That you could use that SaaS product for your needs. And the last option is really build. And build is also something that is becoming more and more possible for the NBFCs who maybe even traditional NBFCs, not traditionally tech savvy, but still build is an option now because of something Mr. Gupta already alluded, that things like low code platforms or things like AI, which can also maybe help you produce software more quickly, are some things that the NBFCs can look at when they're thinking of building. Of course, the other options of acquisition, etc., are also possible. So I think NBFCs also will look at all these three options of partner, rent, and build. And so, in short, just to end my comment, I think there are exciting times ahead, and we'll see a lot of movement for sure, and a lot of new technology and a lot of new services that will come up.
Thank you, Mr. Mandal. I think you are right. It touched about the key drivers. What you're talking about is the internet, or talking about the mobile and digital. You also touched about the other things which are instrumental for the growth of the digital banking or digital informations. As you can, Department of Trade and Promotions, what they are mentioning about the 21, fintech is having a 50 billion market size, and by 2025 it may go up to 150 billion for that fintech company. How you see that innovations in the fintech company can further be boosted? And we are talking about, you also told about the intelligence, artificial intelligence, that you're talking about the machine learning, or you're talking about the reward. Any things you feel that some innovation further be happened?
Right.
Any idea on that, Mr.
Right. So I think a lot of the innovations would happen on the type and quality of data that the different institutes will start, gathering and maintaining. Right? Like I was saying, that in the AI ML technology space, the algorithms are really commodity. Everybody has the same algorithm, right? And the algorithms are open source. Really, what matters is how good quality data you bring in, and then how you have. It is really a service that one have to build the models. Right? So it is not that you don't really have to worry about, do I have the ability to build the stack, right? What really matters is how you can use the stack. And a lot of the innovations hence will happen either in business use cases and also in how you use data. So if you look at a large NBFC which has operated for last 20 years, they actually probably have a lot of wealth of data. So to give you an example, right? So I think on the onboarding side, probably a lot of the things Fintech will do or maybe other companies will do. But if you look at collections and delinquency, right, an NBFC that has operated for 20 years, they have really a lot of data on which they can now do much better predictions, much better bucketization. It is really about cleaning up that data, making sure that data is available in the right form for some data engineers to really now build better models around it. So a lot of these things, I believe that the NBFCs will build, right? Because they have probably better data than anybody else. And on the other hand, some of the other areas, probably the NBFCs will partner.
Very nice, Mr. Mandal. I will come back to you. Now I'm coming to Shri Manish Arora. He is CEO, Kurt Solution LLP. He is expert in marketing and finance. He is also SME business, wearing multiple hats, including digital lending, banks like, he also worked with Citibank and DES, Yes Bank, etc. He's expert in the fields of the NBFC. Mr. Arora, just like Indian NBFC, improving operational workflow, and what specific benefit they can drive from the robotic process automations. When we are talking about robot, this is RPA. How your thoughts in this respect? Because you are expert in the NBFC field also. Have any view on that, Mr. Arora?
Yeah, thank you, Mr. Gupta. So my views will be limited to the beneficiary of these technologies, RPA especially. I started the journey of financing in year 2000, and now it is almost 23 years. So the major factor which is helping in business persons like me to actually scale a business is of course technology, and RPA has been helpful all along. When I was at Citi, we used to collect applications through physical mode initially, right? Even now there is a guidelines to collect even MSME application form also digitally is still not to that extent prevalent. We still collect application and get ink signature over there. So first exposure which came to me as banker was OCR technology, right? That optical character reader. That was the one thing which Citi introduced very early in the life cycle, whereas other financiers and bankers latched on to that later on. So we were fascinated by that technology. It used to pick up data through the applications very conveniently, and that used to go to the core system of banking. And thereafter, of course, the application moves on from loan sanction process to disbursement process and all that. So that was the initial days. But now, as I talk right now, my last experience with DBS Bank as head of SME business, we have developed analytical based lending model, right? Algorithmic based lending model, ABL. That's what we build in over there. And I was the project lead for that business. And over there now, come 2020, we have seen complete turnaround. It is not only RPA, but AI ML, as we discussed, came into play. APIs came into play. The source of data become very golden source, right? You can authenticate, you can verify all the data, PAN card, Aadhaar, everything was done on a click of the button. And we have been told that now decision making is the only differentiation, right, in the business. Everyone is having all the tools and ammunition. Everything is open source, as Manda also pointed out. Everything is available to everyone. The differentiation lies in your understanding of the customer and accordingly giving the decision ASAP, right? So that is where again RWA has play a big role, wherein RPA has played a big role over here again. The moment we log in the application now, all the legal cases are scraped through the web of every promoter, every management personnel of any entity, whether it is proprietorship company, partnership company, or private company. Every director, every legal case pending against that entity as a entity or as an individual, the technology of RPA helped in scraping through all the web, all the legal courts are automated or otherwise. They scrape through that data, and we get to know that okay, this customer is having so many legal cases pending against him. The moment the application moves further, we get to know all the frauds, all the data, due diligence, due dupe, or internal NBFC due dupe, or banker due dupe, or database in any part of residing anywhere. If the guy has committed any fraud, you'll get to know that what kind of fraud has been done by that person or entity, whether MC data or any data. Again, RPA plays a major role in that. We can get to know that any frauds the person has done. Further, we move the application, we collect the bank statement. Okay, now the guy is good, his bureau score is good. Let's move on. Let's give him now eligibility and how much we can finance him. The first thing which comes into play is that you collect bank statement, you collect financials, you collect all the other credentials of the customer, so that you can actually decide whether what is the quantum of loan you should give. Suppose he's passed the first screen of no legal case pending, bureau score okay, and other 5-6 criteria which everyone does in the application. You again move to, and again now this bank statement analyzer comes into a play, which was never the case earlier. In 2000 we used to do bank statement analysis with a pain of almost one day, full day gone, and now multiple bank statements across any bank. Whether you do through native PDF or you get a raw kind of scanned bank statement, there is a tool available thanks to OCR, thanks to other technology on robotics front. We can again do the analysis of bank statement conveniently and get to know that how much cash flows are actually available as per the bank statement. Financials, MCA data, yes, you have got standardized balance sheet, easy to analyze them. But proprietorship, partnership, again, you have to use the technology which is we talking about over here. RPA technology again has to be come into play, and we have to again get the entire spreads done with the help of the technology. Everything is calculated, spick and span. You get to know what is the asset, what is the liability, what are the ratios, financial ratios. Everything is available on one click. You get to know whether this company is how much indebted, how much leverage it is, or ratios like DSCR, ratios like current assets, current ratio. Everything is available on the click of the button. Easily, the application moves to the next bucket. Customer asks for 100 rupees, you are now eligible for 80 rupees. It moves to the credit measure bucket if there are naturally no issues. Again, credit measure has a access of technologies to understand the entire demographics of the customer, all the data of that particular customer, including the place where he's residing. You get to know about his demographics through the use of technology, that he is applying for the application from Madhya Pradesh, whether he's actually residing in Madhya Pradesh or not, because if he has logged in the application through whichever device, you get to know that where he's located right now, right? So a lot of data is available, and credit measure naturally has got a task cut out, and he that within a few minutes he can give a decision because every data point is available with them. Come to disbursement. Again, it's really helpful. This technology, you are able to get all the data points inputted in the LMS system. Again, using this technology, the data from application stage moves to the LMS stage, loan management system stage, with the help of this technology, and you can complete the journey. Coming back to the collection and everything else, again the technology comes into play. You can send a reminder, due date of collection. Everything is automated now. No need to send application, email alerts. No need to send SMS alerts with the help of your own employees. So all the repeated tasks, the summary of all these things, that all the repetitive tasks which we impose on the employee earlier, now it is left to the technologies like RPA. They do all the scraping of the data, they do analysis of all the data, they do come out with the outcome of every thing, and they do remind us, like a human being has a fickle memory. We are forgetful. this is the technology which helps us in ensuring that this is the customer. He has a due date coming in. He has a renewal coming in. He has a some incident happening. We call it suspicious transaction report, right? An STR report is there in all the NBFCs and banks now. If somebody is doing transactions which are beyond certain levels, acceptable levels, that we get to know again through RPA kind of technology, right? So it helps in that also. Fraudulent thing happening, and we get to know fastest over here. If he has raised loans somewhere else, get to know through technology of scraping, again web. If any enforcement raid has happened on his place, you get to know, because again data is pulled through newspaper reports and all that through a technology, RPA technology primarily, and you get to know that yes, this customer has got an issue now. It's a flagged account, and you can take a action of doing certain corrections or certain rehab in this account. So entire journey, what I'm trying to say is that right from identifying the customer to disbursement and the monitoring of the customer, everything is spick and span done through this technology of RPA and AI ML put together. All jargons we can use, but APIs and everything we can use those jargons. But ultimately, yes, NBFCs are really beneficial. Customers are really beneficial. Employees are really beneficial. So everyone's journey is streamlined, smooth. Customer journey, employee journey, and the overall journey of organization becomes much better through the help of this technology. And we are lucky to be living in this era of convenience and comfort. Yeah. Thank you.
Very nicely, Aroraji, you have covered. Whether you're talking about from the beginning, from life become very easy with the technology. You're talking about. So what we're talking about the RPA, yes, software technology. That means human actions interacting with a digital system. So we will discuss the intelligence. We will discuss artificial intelligence later on, because this is a vital subject of this fintech company. Fintech is very useful. Some innovation also coming. Either you are rightly told from the legal points, from the processing of any financial statement, to a disbursement, to a collections. Everything is very, very easy. So I remember the days before nationalization, even after nationalization of the banks, where we are doing all interest, other thing, manually. It's take a lot of time to have a balancing the books. It is a matter of days, very difficult. Now with the, as you rightly say, one button, you can balance also. You apply the interest, you transfer your all the credit balance, your salary, other things to any account of the peoples. I think this is a, thank you very much, Mr. Manish. You are rightly covered all the report, how technology has changed the life of the persons. So I will come back to you. Now I'm coming to Shri Narendra sir, who is our uncle. And he is awarded in the field of banking industry and exceptional contributions to the Indian banking sector. He is also on the RBI Technical Advisory Committee on Money Board, Forex, and Government Securities. Chairman of SOCHAM, National Council for Banking and Finance. So, respected Narendra sir, so we have no word to express our thanks to you. Even last moment, you always obliged us. Any subject which you used to talk to you, you are readily, you don't need to read anything or study anything, you're always available. I am thankful to you, sir. So, Narendra, see, important aspect. What is the role of Indian government in supporting the fintech innovations in NBFC sectors? Because you are helm of the RBI and government interacting with the SOCHAM chairman also. I think this subject relates to you. How you feel that, how the government should help for the supporting the fintech? Hand over to Mr. Narendra, sir.
Thank you, Ji. Gupta Ji. You are really great in continuing to do quite a knowledgeable sessions under the brand of Resurgent India. So this is really good. And also you have another platform where also you do quite a lot of such sessions. So I should congratulate you and the Resurgent India for this, and thank you for that. And as you rightly said today, the startup ecosystem and along with that fintech, both are very important. And under the leadership of our Prime Minister Narendra Modi, he has given a good boost to the startup ecosystem, and the department of separately set up, and also the interministerial committee, and also the Niti Aayog, all of them, and even under the Commerce Ministry or skill development or agro-related fintech or startups, and in all these specified areas, this ecosystem of startups have been given quite a lot of reforms also in terms of rules, regulations, and some tax concessions. And as on recent date, maybe it is around 60 to 70,000 startups have been approved by the government. And out of that, maybe at least 2 to 3,000 maybe the fintech. And the fintech adoption in India is more than 87% as against the global average of 64%. And as you rightly said, the fintechs are likely to generate a revenue of 1.3 trillion of US dollars by 2025. And in the India's quest for 5 trillion economy, as you rightly said, maybe 2026-27, 1 trillion of digital economy contribution will be there for GDP. So the government first developed the digital infrastructure, and to their that stack program, they developed as much digital infrastructure, digital ecosystem, and they also brought in the one under our Prime Minister, that Jan Dhan, our Yojana. Under that, banks opened more than 45 crores of savings bank accounts. And this is a JAM, that is a Jan Dhan, Aadhaar, and mobile. This trinity has been enabled, and Indian contest the utilization of mobile banking or internet banking or smartphones. And recently, the Reserve Bank has also enabled this type of payment ecosystem without the smartphone also. Even those of the rural areas who cannot own smartphones, but general phone, there also has been enabled through the NPCI product. So that another important is the UPI 1, UPI 2, and other payment product which are done by the NPCI, that has reached the milestone in terms of volume and number of transactions. Now that gave a boost to the entire ecosystem using the Aadhaar-based payment system, and also the centralized KYC and video-based KYC and other enablers, which helped the fintech to come with the different types of payment product. Similarly, the different also on online lending. Out of around 1,100 online lending programs, the recent study by the Reserve Bank indicated that out of that 600 are not really authorized, or slightly they are not following the code of conduct or standards. So that led to a different set of problems. So, but the government also came with the fund of funds. They gave a budget provision of 10,000 crores, which is administered by the SIDBI, and SIDBI has promoted by equity investment in quite a lot of fintechs, particularly in the micro and small industries, or in trade and commerce, and maybe in the agro related by the NABARD also. So that fund of fund house has a capacity to increase from 10,000 crores to 50,000 crores. Similarly, Reserve Bank came with the concept of regulatory sandbox, where all these fintechs can have the testing on commercial lines on their application being accepted by the Reserve Bank. And once they pass through the regulatory sandbox, they will have the commercial adoption quickly. So they are already regulatorily compliant. Similarly, they came with the Reserve Bank Innovation Hub. Now that Innovation Hub also promotes, and they came with the separate department of fintech in the Reserve Bank also. Now, along with that, the recent introduction of central bank digital currency as against the cryptocurrency, which is the blockchain technology and all are being used, but they are speculative instrument. So the central bank digital currency will act for retail payments as well as for the wholesale payments, which is under testing. And later it will also result in cross-border transaction. The recently government came with another open network for what you call e-commerce, ONDC, by which all the retail trade and others who will get registered there, and all on e-mode, they can have, and they can really face the competition given by Amazon, Flipkart, and such other e-commerce companies by giving the network by the government itself. Another is that Reserve Bank has come out with the guideline that up to 50 crores, any fintech or any startups funded by the bank are under priority sector. So much of the banks started with a separate startup branch. And recently, some of the startups, particularly fintech also, are getting difficulty of what you call after the initial funding and exhausting their money. The second funding or the third funding, that is getting slightly difficult because of the global and domestic situation. The such investors or angel investors are also having some concerns. Now that's where the government came with that under their complete guarantee scheme. 10 crores of such credit can be given to such startups or fintech. So in this particular ecosystem developed, so India has seen quite a lot of fintech, but their responsibility has also gone up. One important thing is fintechs can be an enabler for providing services to the customers through the mode of the regulated entities. They cannot do the activities which are regulated by the Reserve Bank and which are to be done by the regulated entities. That activity they cannot do. Having gone for such digital lending in the through the regulated entities, other than regulated entities, through themselves, some fintechs and such digital lending firms faced recently problem by the RBI saying that all such releases will have to be done through the account in the NBFC or by the bank, and you can only get the what you call enabler, and you can also get the source, but the such credit decisions are to be done by the regulated entities. So the earlier of embedded finance or buy now pay later finance or such other wallet credit, all that led to all are now getting in a regulated mode. So that is where a responsible activities in a with the what you call self-regulatory organizations with the due respect for compliance and due diligence, KYC and other things, and the type of customers they bring, all that responsibilities also there on this fintech. In spite of government support and the regulator support, and all are encouraging innovation and having a slightly certain arbitrage for them, but they must have a strong partnership with the NBFCs which are regulated or with the banks, and they can also equity participation by them, which is also gaining good traction. So that is my first answer to your question, sir.
Thank you very much, sir. You have mentioned about the jam. So I feeling a jam is very nice to me.
Yes.
Jam that. Until we are talking about that, you're talking
Yes.
about smile. I think this is a new concept which you have given. This is JAM. And you're also talking about the BDO KYC, you're talking about the fund of funds. And so many equity infusion schemes are sponsored by the government of India. Beside the innovations hub, which is set up by the RBI as a fintech company. I think RBI, Government of India, is giving a very boost for the this fintech company. And the digital currency, what you're talking about, I think this is order of the day for digital currency and e-commerce, what you are talking about. I'm thankful to Mr. Narendra. I think you have come very rightly touch all the government helpful under the fintech industry to boost the fintech and the collaboration of the NBFC to achieve the 5 trillion economy of the country. I will come back to you, sir. Now I'm coming to Sri Raman Agarwal.
Thank you.
He is Director of Finance, Industry Development Councils, Body of Assets and Loan Financing NBFC. 30-year experience in NBFC and member of advisory group of Ministry of Finance, RBI core groups, awarded Man of Excellence by the Indians Achiever Forms. People want to listen to him. He is very, very knowledgeable person, very intelligent in the study of that. Sir, my only point to you is artificial intelligence, which we are talking about. It is coming in a big way. You cannot replace the human being. Still, the action of the humans can be seen by the machines. Now it is said that machine can think as human beings. I think you are the right person to talk about the intelligence. But any view on that aspect, artificial intelligence, which involve replicating intellectual processes through machine, especially computers. I hand over to Mr. Raman, sir.
Thank you, sir, and thank you, Resurgent India, for giving me this opportunity. See, if you look at the journey of the NBFC sector, having worked for 30 years now, I remember when I started my career, NBFCs were traditionally known to do asset-backed lending. And that too, we all know some of the good old NBFCs, which are very much in function today and doing exceedingly well, are specialists to be known in doing automobile lending. And there, the entire focus was perhaps on the asset, which was the prime security. So the key focus area of any NBFC doing this lending was on the asset. And that is where NBFCs were able to take a call on giving credit to the unbanked or the underbanked segment of the society, because the focus was the asset, which the NBFCs were themselves experts and were very well versed with the economies of scale of these various assets. As things moved on and the need for doing other than asset-backed lending, that means including unsecured lending, the small-time businesses, small MSMEs who do not have any assets to offer. So for them to do lending, something else was required. And I think that is where it was very apt and very right time that technology just came in handy for the lending sector, specifically NBFCs. And as you mentioned, artificial intelligence, where machine learning is, as I believe, although I'm not a technical person, machine learning is a subset of artificial intelligence. So all that this technology enabled was to give the lenders like NBFCs the tools to do analysis which was otherwise manually or physically not possible. When I say this, the two key aspects, of course, when you give a loan, there are two aspects. You gauge the repayment capacity of the borrower in terms of going through the financials. So there the technology is helping in terms of, pulling out somebody's credit history, pulling out somebody's ITRs, bank statements, and his financial standings. That's a standard procedure. But more importantly, now with the advent of what we know as the account aggregators, things like cash flow based lending has started. So the cash flows, understanding the cash flows of the borrower is something very important, which is brought in. So this was one aspect of the technology which I added as a very important tool. In addition to the repayment capacity in terms of financials, the other aspect was the risk profiling. So to do a risk profiling of the borrower, once again, technology has come up very handy. So you have a lot of data, as one of the previous speakers also said. There is a lot of data available. Now the idea is to do the right kind of analysis. So when I say risk profiling, whether you do a risk profiling based on a particular profession or a particular business that the borrower may be in, and since you have the data, the historical data of such kind of similar businesses, what is the kind of risk profile they have and what is the kind of risk they face. Similarly, it could be a risk based on the geography, that means the location or the operations where the borrower works or his business works. Third could also be the risk arising due to external factors. Now, external factors could be local, could be state level, national, or global, what we saw a pandemic. Or we have other risks which we are nowadays there is another very fashionable risk being talked about, is a regulatory risk, because with the regulator taking such a dynamic role, we are fast seeing an era where sometimes we feel perhaps the regulator is more active than the sector itself. So we see a lot of regulations changes happening. So there is a regulatory risk. Now to do all these kind of risk analysis, you need specific tools which are being aptly provided by the technology, artificial intelligence, machine learning. They're providing this. Third aspect, of course, once you do a financial study, you do a risk profiling, then of course is the behavioral aspect. And that is where also once again technology has played a key role. So when you escape through the borrower's social media posts, what is he posting on social media? How is he interacting on the other e-commerce sites? So there you understand his behavior. And human behavior today is being given a lot of importance, whether it's finance, whether it's technology, whether it's consumer goods, wherever everybody's focus is on the behavior of the ultimate consumer. So all these aspects are being very beautifully handled and analyzed, given ready to the lenders by the use of this technology. And that is where these new age fintechs have come in very handy. And as Mr. Gupta rightly said, I am a very staunch believer, call me an orthodox person, that yes, technology is a beautiful and a fantastic enabler, a facilitator, and that is where we need to embrace technology, keep ourselves updated. Even people with gray hair like me are forced to keep ourselves updated. But the day we think that technology can replace humans when it comes to lending, I think that will be the death knell of doing digital based lending. So I think that human touch has to remain. The shape and manner can always vary. So the technology comes as a tool for enabler, as a facilitator, which increases your efficacy, your efficiency, and more importantly, your transparency when you give or reject a particular loan. And that is where, the ethics and code of fair business practices as prescribed by RBI also comes into picture. And what is really good and exciting is that the regulator is keeping pace with this technology. So we are living in an era, imagine, where the regulator is talking of a regulatory sandbox. Now this was something I remember in my early days, young days when I started, this was something, a dream we could never think of. Regulator means ek danda, a strict, something very rigid, spelt out, you have to follow it. But today, even the regulator talks about a sandbox. So I think that is where the intention of the policymakers and the intentions of the regulators also come into picture. Then another very important aspect, as I see today, is apart from all these credit appraisals and doing risk profiling, behavioral studies, etc., When it comes to the operations, we are seeing some very good, fantastic, again, technology pitching in, and a lot of fintechs are doing a fantastic job. So whether it could be doing a simple verification, so which was earlier done manually, a person, the field person used to visit and do a verification. All that is done through technology. Of course, KYC, we all know, video KYC, and with this KU and sub QA license being given now, you could do Aadhaar-based KYC, of course. And then you also do operations in somebody, I think Mr. Narendra sir talked about the payment system. So you have technology playing role there itself, and we have even blockchain creeping in with the regulator coming in with the digital currency. So there is technology in your basic verification, in your payment systems, and as I said, even in asset-backed lending, we are now seeing technology creeping in. So, for example, just few days back, I was just reading it somewhere that you have now APIs available where you can do, which could link you to. So, for example, if you're talking of a vehicle, it could link you to the Vahan data. Vahan, if you all know, is a national level database of all vehicles, which is maintained by the government of India. And so you get a click of a button, you get to know the history of the vehicle, or whether there is any lien on that vehicle, what is the ownership pattern of that vehicle, blah, blah, blah. Everything is available at a click. So once again, technology creeping in there. Very interestingly, there is a startup which I personally have recently got associated with, is the technology also getting into the field of legalities when it comes to recovery mechanisms, whether it's arbitration. So you have this ODRs, the online dispute resolution platforms being set up, which are facilitating and making proceedings like arbitrations very transparent and very speedy. So in every aspect, we are seeing technology getting a very important role. So, as I say, to sum up once again, while we all need to certainly keep ourselves abreast with the technology, but it's a two-edged sword. We are seeing there is a lot of question mark and doubts over the data protection, data privacy, data location. There is a lot of debate going on. Where is the data to be located? At some point, Government of India took a firm stand that all data has to remain within the country. But now we see a change. They are saying we will allow some friendly geographies, quote unquote friendly. So there is a flexibility there coming in. Now, these are all aspects which need to be looked at when it comes to the data set. And that is where I think a lot more work needs to be done. So all in all, yes, artificial technology, intelligence backed up by machine learning, and this whole beautiful world of technology has added a big boost to the lending mechanism. And today we have some of the new age digital lenders, or for the company which I sit on the board of, Pesalo Digital is one company which at one point was a traditional lender doing automobile lending. And I'm happy to share today, with an assets under management of more than 3,000 crores, it's a purely digital platform based lending, doing absolute digital lending, small ticket size lending, using all technology. So that is where we see a lot of transformations happening. That is where we see a spurt in NBFC license applications coming from the fintech players. A lot of global people are also showing a lot of interest to either partnership. One last aspect which fintech has done, which technology has done, is to look beyond and build bridges and partnerships. So today we are living in an era where NBFCs are building bridges with banks. So whether it comes to co-lending, we are living in an era where NBFCs are building bridges with other lenders, and are not only the other lenders, the other, I would say, segment of users, whether it's other regulator or the various aspects, whether it's capital market or whether it's funding sources in and outside the country. So technology again is enabling us to look beyond. So I think I will rest my case here and leave things open for any questions.
Thank you. Thank you, Raman sir. I think you are covered very rightly, look beyond. And further aspect, what you are talking about, the regulatory risk, I think this is a new concept, and behavioral aspect you are also talking about. Sir, you are having a more than 30 years in the field of NBFC, also member of advisory group of ministry. Sir, as per the NBFC figures available with me in October 22, there was asset size of 42.05 lakh crore rupees. As experience under the field or advisory to the ministry, how you see the future of the NBFC? By co-lending, other things, they are coming out very clearly. And India needs macro finance for that because there is no dearth of financing. People need finance in a rural sectors. How you feel that as a advisor to the NBFC?
So I think very good question, Gupta sir, you raised. And interestingly, in my entire career of 30 years, I have heard this question every alternate year as to where are NBFCs heading to. And to my great surprise and pleasant surprise, I have seen NBFC sector come out of all the turmoils and come out stronger. So whether it was the turmoil of 97 when we had that Bhansali era and the entire churning happened, whether it was the global meltdown in 2008, or whether it was the 2014 when the entire regulatory framework for NBFCs was hauled up, whether it was the ILFS default scenario post that 2018, which caused a severe liquidity crunch, or whether it was the pandemic COVID driven scenario post 2020, each time questions were raised on the viability and the longevity sustainability. And every time data has shown NBFCs have come out stronger. Even now, today, as we said, NBFC sector is doing exceedingly well. I mean, we are seeing a lot of interest being generated from global players. And it's not Raman Agarwal saying, sir, if you look at today, the IMF or the World Bank, fortunately, that is how I got associated with World Bank. World Bank and IMF are today looking at NBFCs as the key players when it comes to financing and developing MSMEs in India. And that is where even international bodies like IMF and World Bank have shown keen interest in their report. If your World Bank gave a loan of $750 million to Government of India during COVID for MSMEs. And one of the three key pillars identified for MSME development was funding by NBFCs. So that is where the recognition has gone up to. So I think a very good question and a very important for people to know, and we are seeing it, but fortunately not enough credit is given that NBFCs, and first of all, we should not live in a misnomer that NBFCs are here to compete with banks. I think that is the most unfortunate statement anyone can make. It's Narendra sir would vouch for me that today NBFCs are extended arms of the banks. They are reaching out to the segment, to the geographies where banks can't reach. It's not because banks don't want to reach. It's because of the sheer size and sheer volumes, because they are into many other activities. NBFCs are focused on lending. So I think the partnership model, which is enabling NBFCs to extend the reach of the banks to the last mile, is what is going to be the future of the day, future of NBFCs.
Very nice, very nice. Sir, I will come back to you, Mr. Raman. So I am just coming to Shri Balaji TK, who is CEO, India Trade Escalators Limited. He is the man from the growth through technology. His artificial intelligence, machine language, digital transformations, mobile first approach. He is the right person to talk about the technology. Artificial intelligence. So have any thought, Mr. Balaji, in respect of the artificial intelligence? You are expert under the field of artificial intelligence. So you're talking about your man from the growth through technology. So I hand over to Mr. Balaji. Give your thoughts, sir. Balaji, sir.
First of all, thanks a lot, Mr. Gupta, for organizing this wonderful webinar. You guys are doing it regularly, and it's creating a level playing field for everyone to come understand, gain the knowledge. So I really need to appreciate, like, knowledge is now distributed across everyone. Thanks a lot. As this specific to the NBFC domain and fintech domain, how NBFC is more and more adopting this AML through a kind of a fintech platform. Okay, so that is what this majority of discussed topics is all about. Instead of touching the technology, what I'll do is I'll try to give the some kind of a use cases where these NBFCs are leveraging the fintech. Fintech is no more a kind of competing with the NBFC. Fintechs are almost collaborating with NBFCs in the way they can able to do multiple activities. So that's how the industry is moving forward right now. Majority of things, what I would say is, since NBFCs collect huge set of data, the decision making need to be happening instantaneously. So what they try to do is, right now they create a kind of a credit scoring model with the help of fintech. A lot of NBFCs do a lot of AML predictive algorithms. When they collect lots and lots of data, as everybody touch based on social media data and other data, the credit worthiness of the customers are getting evaluated. So as you rightly know, like, still we need to touch the bottom of the pyramid. So for the bottom of pyramid, still a lot of people never even took the loan. So you could be a first guy who's offering a loan. So to assess them, since already they're using our mobile penetration has gone so deep, so we could able to read their mobile data and try to give some kind of a credit scoring to them and assess it, and then try to give the loan, which happens instantaneously. Okay, so what happened here? We are taking the customer experience here. So I given some set of data, customer has given some information, could be in a position to immediately give them a credit scoring and then offer them the loan to them. So here the customer experience is one thing which, with the help of AML, you could able to achieve it. Second, which is very, very important, is fraud detection. Since a huge set of data is established, any NBFCs or fintech who is helping the NBFCs or the banks, for everybody, like, loan is only one time. You give a loan, could be a few lakhs which you need to collect it for a year or two, whichever period of time. Only if you collect the full amount, you could able to make money out of it. So everybody has a huge book size to keep collecting it. So if the decision is happening at the first instance itself, while giving it, if you could able to identify some kind of intent, what is a purpose or other thing, then it is easier. The collection mechanisms goes kind of end-to-end mechanisms. So it helps in a lot of fraud detection. It helps in analyzing the large volumes of data, detects if any fraudulent activities in real time is happening. This also helps in reducing the risk and preventing of financial losses. So this is the second use case which I strongly see, which is helping the NBFCs and fintechs. Third thing where I see is customer segmentation. Since fintechs and NBFCs are using AI and ML to segment the customer base. A customer could come from any geographies, any demographics. If you could able to segment the customer based on their age, based on the credit worthiness, based on the income level. Okay, so what happens is it helps us to give them personalized loan product. So this is one huge use case where I see AI is helping it. Customer segmentation. This is a 3 use case which comes. The 4th use case which I could able to relate is the loan disbursement itself. Okay, we can automate the loan, as everybody spoken about. There are a lot of SaaS players where I can able to read the KYC information, whatever KYC I capture, and you also talked about with the vehicle number I can able to integrate. So there are huge players in the market who are offering API as a service. So when you're designing a product, we not want to recreate everything. Already the players are there in the market. You understand what kind of things you want to integrate through API, start creating the layers on top of it. For example, for all, if I put a mobile number, there are certain fintech companies who could able to give the complete information. If I put a KYC, I can able to get complete information. If I put a vehicle number, I can able to get complete information. All this information gives us, so that decision happens immediately. As well as also, once the decision happens, I not want to generate any manual loan documents, nothing. So automatically we could able to trigger it. So there are various fintech companies who help us in the end-to-end journey. Okay, all these fintechs are using various AI algorithms in it. So my point is, based on your customer profile, based on your business profile, see which fintech you can able to collaborate to define this journey, so that it becomes easier for you. And the best thing is one more point which you need to consider is the cost factor. Since it's a SaaS platform, since you are going to operate with multiple players, since you're going to read a lot more documents, see what is the cost factor for it. For example, I'm going to do a disbursement for one customer. For this, I'm going to read multiple APIs through different technologies, through different products. You first fish what's the cost of your lending. Okay. So once you fix this cost, then based on that, you can able to figure it out and touch base with the various fintech companies and understand what kind of capabilities they can able to offer to you. The last thing which I want to say is the complete challenge is AI, where it helps is risk mitigation, risk management, as well as on the cyber threat. Since we have generated huge set of data, very huge set of data, everybody is showing interest in our data. Okay, so the cyber threat and cyber security is one major concern, even for the larger banks, very large banks, and even for NBFCs, fintechs. Anybody who's operating in this field, who have a customer data, they are prone to attack. So AML helps us in protecting certain set of data. So we need to discuss with those kind of a place and understand how we can able to protect our system. Similarly, in this, it comes under risk mitigation frameworks. So what we can do is with this lending technologies, since we created a lot of credit scorings, a lot of interest rates are there, operation risk are there. For all this, you can able to define certain algorithms for it and understand it. So I see these 5 use cases which broadly helps us. One is that credit scoring, another is a fraud detection, another is customer segmentation, another is loan disbursement, another is risk mitigation and framework, which also involves the cyber security. These are the 5 wide areas. I would suggest AI helps us in playing a level playing field with all the NBFC companies. Over to you, sir.
Thank you, Mr. TK. I think you have covered very nicely. They're talking about the fraud or customized segmentations or personalized product innovations, end-to-end journey. And you also talk about some disbursement also. And there, so you can say something about the distributed ledger technology. This has come with a big way. How it can be implemented by the NBFC. Have any view on that? Distributed technology.
Distributed technology, I'm not a technology expert in that. Distributed is end of the day, it's decentralized data where the ownership is not lying with the centralized server. Like still a lot of frameworks are getting matured in that. Okay, I think the technology company can able to Shiba and all this is from a tech space where you can able to do a lot of value addition to it. But I'm from a user perspective, I can able to see which kind of a use case I can able to use the distributed technologies. For example, very simple use case, can I use it for some kind of a printing? Can I use it for some kind of other use cases and all? So from a user perspective, I see a lot of use cases, but still a lot of use cases are getting emerged for this distributed technologies right now, I would say.
Distributed technology, what it means is, this is a digital system for recording of transaction of the assets in which the transaction and the details are recorded in multiple places at the same time. It is highly transparent. I think this is the major aspect of it.
We don't have a centralized server for it, and nobody knows where the data is residing, and nobody has the rights to even delete any set of data.
You're right. You're right.
It's a complete, it works based on complete blockchain technologies.
Guptaji, it is in cloud management. That can be in a public cloud or private cloud, and so it gets you the efficiency. It gets you reduced cost. And it will help also, but it is also has got lot of threat. Now, just I saw somewhere the cloud threat has gone by 571% increase in the recent days. The what you call cyber attacks. So this distributed ledger mechanism means where you have a public space through the public cloud where you can have a firewall. And your data is safe in that, and it is being used under the that facility, but you can have a private cloud where it will be created only for you and you use that. So you are quite a lot of your data storage, data people who involved in getting the data created or such accounting and other systems all could be managed. So you will have also efficiency as well as your labor cost will come down. And even the cost of that, including your electricity or other consumption. Now there are, I came across one what you call company who can study the bill of your last 2 years, 3 years, what are that you are paying, and then they can arrive at some tool which will give you to reduce those costs also.
So that's all happening from a cloud perspective. If you're using a large cloud data, and if I suppose hundreds of server, I host it, like with any of the public place, people are doing it as a service and come say, show me a bill, I'll try to reduce it and understand it. So all that is happening as a service, actually.
You're right.
Very, very interesting thing. Yeah, but still, I would say distributed ledger, still maturities still are happening. But from an NBFC or banking perspective, still the real-time data, saving it in the distributed ledger, still discussions are going on. Still a lot of people are using, testing it with very many use cases, but not the real-time transactions are getting saved. It will take further more time for the distributed ledger to get into that.
Very nice. Now I'm coming to respected Raman sir. Raman sir, there was one question, I think it is omitted here. The NBFC not following the ethics, and somebody telling that they are not financing to a startup. Have any view, Mr. Rajav, on that respect?
See, I mean, while I don't know that person has had any particular experience, because generally this is not correct and absolutely not correct, because NBFCs are very much, as we know, like all regulated entities, NBFCs are also subject to Code of Fair Business Practices, which broadly the contours have been prescribed by RBI, and each company has to draft and adopt that Code of Fair Business Practices. The board has to approve the same, and the same is shared with RBI and is publicly displayed on the company's website, is also displayed on the office of the company. And that Code of Fair Business Practices talks about all ethical business practices. So whether it's being transparent, even if you are, so for example, if you reject somebody's loan, you need to tell why the loan has been rejected. And when you sanction a loan, all the terms, everything has to be very clearly spelled out in terms of the actual rate, which the interest which it's going to cost to the borrower. So everything has to be clearly spelled out. So I don't agree with this idea, and let's appreciate that had that been generally the case, that NBFCs are not doing ethical business, do you think any bank would be ready to do a co-lending or a partnership?
I agree.
So I think that itself.
I agree. Thank
you. I think somebody might have had an unpleasant experience.
Some idea, something is there in their mind.
Right now, most of the NBFCs are doing co-lending, they partnership with the bank, and they do lots of due diligence. Suppose that only it happens. I think from due diligence perspective, everybody is aligned.
Yes,
people are appreciating this. Siddharth is telling webinar is very useful and very well articulated, and some people are appreciating. Request you to please share your feedback. Supporting government support to startup ecosystem. They also a very valuable webinar, informative and going to be a new thoughts. Very nice webinar session. I think everybody appreciated. The last, I request our mentor, Shri Narinder sir, to summarize the position and give some thoughts to our participants who are listening to you, sir. Any advice to them? I request Narinder sir to summarize the position and tell something advice to the participants, sir. Narinder sir.
Yeah, thank you, Gupta ji. So we had a very reputed as well as eminent speakers here. So they have given a good and particularly Raman Agarwal being in the what you call at the policy level, and also with the our self-regulatory organization like FIDC, and with his liaison with the government and Reserve Bank and with the other stakeholders, he has given a very good account on the macro as well as the other current scenario. going forward, where prospectively also NBFC will have a very greater role. And in that, the fintechs are really the great enabler. The only issue is the fintechs, when they are providing that services, they have to in line with the best of the governance, best of the standards of their what you call self-regulatory standards, and they need to have a robust what you call security system, and they have to also have a technology which is can withstand or get the accelerated business support, and it will also be able to provide a what you call more enabling thing to the NBFC. Because one important risk based by the NBFC is whatever third party risk management or third party service providers, if they are not in compliance with the overall compliance, or they are not following the cyber security or information security or the data security, and all those certain regulatory government and the RBI, the reputational risk will be there for NBFC. Recently, one great bank also in India contest had another NBFC which had another arrangement with another service provider. There was a big leak of files. For a 1 year, file got leaked, and it has not only that agencies going depth into that, and government asking, regulator asking, even the principal, the bank also were asked how all these things could get into that, because the customer's protection has been the main concern of the regulator, and mis-selling or getting into some irregularity where the 600 which I mentioned, that's why the guidelines came. It may be looked as it is a little deterrent, or it is little setback for fintech, but such of the fintechs who are getting through the real know that they need to be on the safer side, and they should have a long-term value creator and value provider, then they will definitely go by the expectation of the regulator. Another important now, because with all that what has happened in best of the SUV bank or Signature Bank or such of the big banks fall, as Raman Agarwal said, that the liability management for the banks, and particularly also NBFC, those who are dependent liability in the sense if they are accepting deposit one or getting the bank loan or other debenture or raising from the market, now liability management becomes very important. The duration of the liability vis-a-vis the duration of the assets, the asset liability mismanagement. Another important is customers' franchise value or the depositors' franchise value. That also will become very important. And are we providing adequate return to the savers? And are we, because quite a lot of time we never focused on our depositors' franchise and more focused on the asset side, the borrowers. Now it is high time that we have to focus on giving adequate return. During COVID, actually, the interest rates were in negative return to the depositor, and even in our RBI governor said that it is high time that we focus on the these depositors or savers. Then, of course, there should be a business continuity plan, and there must be, because this type of any disturbance coming out of domestic or global any security aspect of that, then you should have alternative immediately continuity plan. So the disaster recovery side, and how do you manage such events, event management, and you should write the risk associated with that. How did we manage that? So in terms of the detention, reporting, recovery, and containment, these are all, the Reserve Bank also looks at all such events on a very close, because it has got a systemic threat. So I think in that respect, NBFC has been investing in technology, has been investing on security or other mitigants, and they also should make full use of the such investment. it also has a cost of capital. This cost of capital will have to be fully utilized, and the return from such use of technology, whether internally or externally, should result in customers' delight and customers' what you call satisfaction or customer confidence building, and they must have a good return on to their stakeholders. With this, I think I feel that we should all congratulate KK Gupta and Jyotiraj, our also for giving from the Resurgent India, and all the support staff for having given us an opportunity to express some of our views. And as there are quite a lot of other areas relating to NBFC, and but as Raman Agarwal said, that in all periods of such up and down, NBFC have survived. But now it is also time for the smaller NBFC to get either merge with a bigger or medium-sized NBFC. And it cannot be that you play a serious player with a higher capital, or you better get yourself merged, because the consolidation is the key and the capital is the key, and their ability to invest on human skills and technology and a very innovative products and a good ease of delivery of product depending upon the segment, that is necessary, for which smaller NBFC cannot do. And regulatory risk also can be managed with the risk scale-based based supervision and all, only by the top mid-size NBFCs. So I think we find as we go forward, there will be some more of strengthening of the NBFC with this type of some structural changes. Thank you.
Thank you, Nidhar sir, very much. I think you summarized the position very well. This from the Resurgent India side, this is our 146th webinar under this series. Beside that, we are also running one association for the Financial Advisor of India. So we used to conduct the webinar mostly every week in that aspect also. So I have, on behalf of the Resurgent India and by personal behalf, I am thankful to Shri Mondal, Shri T.K. Balaji, Shri Manish Arora sir, Narendra sir, and Raman Agarwal sir. I think this webinar is very practical webinars. We talk about the practical aspects of the Fintech and NBFC, how the Fintech playing roles for the development of the economy in respect of the NBFC and even the banking sector also, and how technology is undergoing a change. When we are talking about the artificial intelligence, we are talking about the machine learning, or we are talking about the robot, and so many other things are coming in a big way. I think this is the subject matters. So at the end, I'm also thankful to the participants who always obliged us, who always give their opinion to holding the various webinar. Under the Resurgent banners, we try to do maximum webinars. As I told, 146, we have done it in respect of infrastructure, SME sector, insolvency, and NBFC. Now different subject we hold it. And we are thankful to all the eminent speakers who have obliged us and also joined in our Association for Financial Advisor of India, who is a knowledge-based association who is helping the financial person for their day-to-day activities. I think that is there. Behind this screen, we are having a Mr. Rohan, who is a coordinator for all such webinars. And he is doing excellent work by coordinating the eminent speaker, by inviting the eminent participants. And I am thankful to Mr. Joginder also, who is the pillar of this webinar, beside Mr. Chaudhary, who is a writer, who is giving us the tips and how to conduct, how to questions, how to other things. And Mr. Chaudhary, I'm thankful to you also, Mr. Rohan and Mr. Joginder, and other team members to whom I think there are so many teams who are the research team who are helping us to have this type of webinars. Above all, I'm thankful to participant. If any participant, any other question from our side, they can write to us. So we will try to reply that things. In the end, I'm thankful to our eminent speakers for that. Thank you.
Thank you, sir. Thanks a lot for inviting us.
Thank you.
Thank you very much. Wishing you all the very best. Wishing you abundance.
Thank you.
Our regards to all
Thank
the
you.
panelists and all the participants. And
Thank
KK Gupta ji ko hamara namaskar.
Ah,
Thank you.
sir, आपका
जी को
आशीर्वाद
हमारा
रहना सर, we are always thankful to you. And recording of this webinar we will send to you.
Thank you.
Thanks, sir. Thanks,
Thank
sir.
you.
Take care, sir.
Thank you.
Bye-bye.
Thank you.
Bye-bye.
Bye.
Thank you, sir. Thank you very much.